Welcome to Off the Record, talking real estate with Joe and Makayla. If you're interested in the Portland, Oregon real estate market and want the unvarnished inside scoop, you've come to the right place. Thanks for giving us a listen. Okay, welcome everyone. Thanks for joining the show. Hello, Makayla.
Hi, how are you?
I'm good. How are you?
I'm good. The sun is shining. We're on take 2 because I didn't have my microphone on the first time, but we caught it early. So
that's okay. It happens.
We're rolling.
We're rolling, and it's October 2024, and it's like close to 70 degrees out.
It's lovely.
It is lovely. So, yeah, we are in a good space here, and today we've got a really, really cool show for you guys. We get asked about investment properties a lot. Is it a good time to buy? Where should I buy? What should I look for? This, that, and the other. And so we thought we'd break it down. Makayla did a ton of research and background and just got all of her thoughts together, and she did a wonderful job putting this together. Nicely done.
Thank you.
Mm-hmm. So the overview of what we're going to be doing, we're going to define your investment strategy, what you should be looking to put together as a strategy for getting into the investment game. We're going to look at the best zip codes in Portland to invest in, different financing options, property selection, analyzing details, property management, and always some legal considerations.
You got to.
You really do.
Yeah, this was a fun one. Like Joe said, we get asked these questions all the time, and I was doing a couple of deep dives for some clients and gathered a lot of really interesting information. So I thought it would be fun to share it here. There's a lot of different opportunities for real estate investments all over the country, but we wanted to hone in on single family homes here in Portland, looking at a long-term rental strategy. So someone who's interested in purchasing a single family home, keeping that for a long time and putting a renter in there, hopefully to pay your mortgage and then some, or maybe you don't have a mortgage, so you're just getting cash flow. But, you know, even if you aren't interested in investing today or next year, I hope this can still be interesting. I think it has some relevant info, fun things to share, even if you aren't going to be investing soon. So
yeah, and multifamily might be part of the conversation a little bit as well, but multifamily is a really difficult one right now because there just is not any inventory.
So low inventory. I look almost every day.
I know. It's incredible. And that seems to be what a lot of people are really wanting because, you know, like a duplex, you move into one side and rent out the other side and you got a great situation, but they're just not there. You would think that we would have some developers, builders, you know, jumping on that, but it just doesn't seem to be happening right now.
Yeah, it's interesting. I wish we had more to share on that one. Hopefully we'll do an episode on that later this year. First step is defining your investment strategy, whether that's single family home, multifamily, condo, apartment. Really, we're just going to be talking about single family today, but if you're interested in looking into the others, we can definitely pull stats on that for you. The next thing I think that's important to look at is, are you looking at a cash flow versus appreciation, or long-term versus short-term rentals? So short-term rental game, that's a little more specific to the different markets in the area, like at the coast, in wine country, some areas of downtown Portland, but really we don't see that a lot here. But lots of opportunity for a longer term investment strategy here, which is great. And the first thing we'd like to talk about here is location.
It's always location.
Very, very important. So we did a deep dive on that because choosing the right market, the right neighborhood, population, job market, all of those things are worth considering when looking for your investment.
Yeah. You really want to look at jobs as well. What's the local job market doing? Comparing rental rates. There's just a lot of due diligence you need to do on that, but I think you really broke it down well. Location is critical, and everything else from there kind of can fall into line. Because if you get a bad spot, people just aren't, unless they're desperate, aren't going to go for it. You need to have something in a neighborhood or an area that has some sort of intrinsic value, has either a big job population or it's got to be something really cool that people can walk around and do different things for. There's got to be something that adds value, right?
Exactly. And for your long-term appreciation goals, if you buy in a neighborhood that's a little rough, you know, maybe the home's a little cheaper, it might be cheaper for a reason.
Yeah.
And also, when considering location, if you plan on managing this property yourself, which we'll get into the pros and cons of that, maybe consider how far you are from this rental property. Are you, a 10-minute drive, or is it on the complete other side of town? Because long term, if you're doing little repairs on this place, that could be pretty taxing.
Yeah, it really could be. Let's talk about zip codes.
This was so fun.
Excited to dig into this.
Okay, so we recently subscribed to this really fun website, which we'll share all the info on, and there's even more that we can share, but it's called reventure.com, and they do very accurate data
very
based
detailed,
on like our MLS, so they pull from that, and then also like the public websites like Redfin.
Zillow, Redfin, but they also do the Federal Reserve, the U.S. Census Bureau. So it's a lot of different statistical data points that they're working off of, but it's really just super information that it has been in the past super hard to get. So for them to break all this down for us has been very helpful. And we're actually going to have a new podcast coming out that digs into the data analysis behind real estate trends. So look for that, but that should be coming out in the next week or two.
Yeah, we are nerds about this data right now. It's been really helpful. So when we're searching for investors, the big conversation is, what is the cap rate? And if you don't know what a cap rate is, it's defined as the unlevered annual return a real estate investor can expect if they were to buy a property at prevailing home values and rent it out at prevailing rates. A higher cap rate means more cash flow returns to investors. But it also means that it might be, you might be looking at home prices that are a little bit on that higher end as well. So a higher cap rate might not be the right thing for you, but it is a helpful metric when analyzing investments, wouldn't you say?
Yeah, definitely.
So it's extremely hard to get accurate cap rates on zip codes and just overall areas in general. So that's not the only metric that we like to look at, which is why we did a deep dive. So I started looking at what the highest rates are per zip code. And then after that, I compared the vacancy rate, the average home values, and then I cross-referenced the cap rates at the end just to see kind of where we fell. And we were pretty dang close. So starting with average rents, because I just think that's super interesting. I think it's important to note that the median rent for a house in Portland is between $1,800 and $2,000 per month.
Which is lower than what I thought it would have been.
Me too.
But that's the entire Portland metro area. Though,
right. So. And houses, so not considering condos.
Yeah.
So rating in at number 1 was Mount Hood Village, which I didn't even know was in my search, but hey, let's include it just because it's interesting. And the average rent there is $4,417.
And I think some of that might be short-term rental, right? No?
No.
It's not?
No.
Wow.
It's an interesting market.
Cuckoo. And
then just under that was Damascus. That's zip code 97089 if you don't know. And that's the average rent is $3,897.
That blows me away. How can that be?
I don't know. But I've been staring at that for a couple months now, and I wanted to really look at it. So it was interesting. But under that, I think, is a pretty good guess here, if you're wondering. But it's Lake Oswego, Stafford area, zip code 97034. Average rent is $3,019.
Yeah.
Then we have Sherwood at $2,954. Lake Oswego again at $2,940 per month, Westland at $2,928, and then all the way up in Ridgefield, Washington, also right around $2,900 a month. And then we have zip code 97229 in Northwest Washington County, kind of that Cedar Mill, Bethany area. That's $2,786. And then we have good old Hillsboro, 97124 zip code at $2,780. And then last but not least, also at 2769 is Vancouver, the zip code 98684.
We'll have all these posted at liveportland.com. That's livportland.com. You can go click on our blog. That's where we host our podcast. And the show notes for today's episode will have that entire graph that shows all of this, because we also have vacancy rates included in this. And Damascus at $38.97 for a average rental rate, the vacancy is only 2.09, which is incredibly low.
Right. Telling you that there's a huge demand there. So the overall national vacancy rate is 6.7%. Here locally, it's 6%, but to see it all the way down to 2 is definitely noteworthy.
Yeah. Some of the other noteworthy areas, Sherwood was 2.5, which is extremely low. Northwest Washington County, Bethany, 2.38, Hillsborough, 3.39, and then Vancouver, 3.15. All of those are amazingly great vacancy numbers. So,
and then the 5 zip codes with the highest vacancy rates, so maybe areas you might want to steer away from, are actually inner downtown Northwest Portland, Southwest Portland, and the downtown area, and then Yamhill and Corbett.
interesting.
Yeah, very random and unpredictable.
Yeah.
Inner downtown Northwest area also has one of the highest cap rates. So kind of a risky game there.
Risk reward. Yeah. Interesting.
So then I went and looked at the average home values for those ones that had high rent, low vacancy rate. Really interesting one was Vancouver. Average home price there is $480,000.
Wow. So 480 on an average, is that sale price or list price?
Sale price.
Sale price, and 2769 in average rent. That feels like it could probably pencil out pretty quickly depending on your down payment, right? Nice. I like it.
And then Hillsborough, pretty close as well. Average sale price of $553, which we see all the time. That doesn't mean that there aren't things underneath that could still be in great condition. And then Damascus, average sale price is $669. So a little bit of a higher price point, but again, you're going to get a pretty good rate over there for your rent.
I wonder if Damascus has that big draw. When I hear of Damascus, I think about properties on acreage, right?
Me too, yeah.
And I think those have been historically extremely hard to find for renters, right? A lot of people want to buy that, but when you're talking about almost $670,000 as the average, that's a pretty stiff price tag. So a lot of people then think, well, maybe we want to rent out there while we're saving money, and that's the lifestyle they want. So my guess is maybe Damascus has kind of hit that sweet spot of people renting their homes that are on property, like on an acre or 2 acres or whatever like that.
Yeah, I agree. Interesting. And then another noteworthy one was Sherwood. That made it in our final list. Average price $637.
Yeah. That's interesting. It really depends, I think, getting your strategy put together. All of these numbers are great, but then remember, location is really your number one on where you're going to be trying to set your plans. And we're going all around these different places like Damascus, Sherwood, Hillsborough, Vancouver, all that type. Finding out what works best for you is critically important, and then plugging in the numbers from there, I think. Don't you agree? Right.
It doesn't mean that all of the other cities in our area are bad. It was just interesting to look at the top 10.
Yeah. Good information. I like it. So let's talk a little bit about financing. What are the different options that people have for financing, Makayla?
So if you're not going to be buying with cash, it's important to talk to a mortgage broker who can help you make sure that this is going to pencil out. But it takes a little bit more planning with that. Typically, they recommend staying away from FHA loans just because mortgage insurance is going to eat up a lot of that monthly payment that you owe, making your return not so great. But a lot of investors look at hard money loans or even partner up with other investors or family members or friends just to get their feet in the door.
Yeah. And, like we always talk about on our other podcast, it doesn't cost anything to just go sit down or get on a phone call with your trusted lender and really find out what your options are. Because if you've got a good paying job with income and you've had that for multiple years, you can be in a really good situation to maybe have a couple of different mortgages. It just is going to depend on your overall situation, and getting in to talk to your lender early and getting someone that knows and understands financing for investments, right? Because it is so much different than buying a single family residence to, owner occupy. The non-owner occupied game is a whole different ball of wax, and having someone that understands that dynamic is critically important. reach out to us if you guys need any references for that. We've got a couple of the very best in town, and it's super easy. You just give them a phone call, and 10, 15 minutes later, you know exactly where you stand, what a good strategy is, what the different options are, and you can kind of move forward from there.
Yeah, exactly. A lot of what I wanted to hit on really quick is a lot of investors, you know, if you're in this for the long game, they start with buying their own primary residence. Maybe they only put 3.5% down, stay in that home for just 2 years, then go and buy your next home, either using equity from your current home or cash that you've saved, and then making your first home a rental property and then going from there. And we call that leveraging your debt, which isn't the sexiest term, but a lot of people do it and they find great success with it. So
yeah, for sure. So let's talk about property selection. What are you looking at when you're thinking about buying a rental property?
So we've talked about location. It's important to analyze property condition. So is it going to need new siding in the next 2 years? Has the interior been updated? Are there, you know, obvious signs of leaks? These are all things that happen in due diligence, of course. But when you're scanning the internet looking for property, it's important to look at condition because, I mean, you know, is it smart to invest in something that's going to need a lot of money in a couple of years?
You want to know exactly what your deferred maintenance costs are going to be. Like if the roof is 20 years old, you know that's going to be a big ticket item for you coming up. So being able to assess that, I think, is critically important just for cash flow and for, you know, knowing and understanding what's going to be coming up, but also during the purchase, trying to get as many of those things handled by the seller as possible is key.
Exactly.
And this is the marketplace for that right now, quite frankly.
It is. The most common pitfalls that investors list are overpaying, underestimating repair costs, and overlooking property management needs. So all things to consider when you're in your search. Let's talk about analyzing deals. That's the fun part.
Yeah, and getting a full list of all the expenses, your mortgage costs, your taxes, your utilities, and if you're going to be using a property manager, what that cost looks like. Getting all that put together so that you can see compared to what your potential rent's going to be. You just got to do that math and get that put together, and always err on the side of caution with that.
Always estimate above what you think it's going to be, especially with property taxes. I mean, really understand that it can raise 3% year over year and often does.
Right.
And maybe stay in a county that has lower property taxes so you can see a little bit more of a return there.
There are a lot more people now that will take a loss, right? Take a monthly loss or a yearly loss or just barely break even or whatever, just to get into a property knowing that appreciation is going to take care of the rest for the next, you know, especially if you're thinking about at least a 3 to 5 year hold. And that can be a good strategy too. Most people think, oh, I need it to cash flow X, Y, Z.
Don't forget you're investing. Yeah, this is a long-term investment as well.
Yeah. If you're looking to flip it in a year, that's a whole different conversation. We're talking about the long-term hold. And, you know, traditionally, we're looking pretty good over the 5-year span for appreciation rates in the Portland metro area. It goes up, it goes down, but in the end, it's always a net positive, you know.
It's just waiting for the right time. Yeah.
Yeah.
And they have some great tools and calculators online just to punch in numbers as you're searching. So we'll definitely post that as well on our website and in the show notes. The next piece we want to talk about is property management. So deciding whether you're going to manage this property yourself or you're going to refer it out to a property management company is something worth taking some time to think about. You know, if you're on the fence, I definitely recommend just interviewing a couple property managers. Of course, we have some great ones we can recommend.
We do.
Asking, what is it that they cover? Are they doing the marketing for you? Are they just doing the paperwork? I mean, what, you know, do their duties and responsibilities ultimately come out to? And is it worth it for you to maybe not see as much of a cash flow to have somebody else do that for you? If not, if you think you want to do it yourself, which is great, we definitely recommend going to some classes. They have great ones all over the Portland area on things to look out for, the paperwork that you need to have in order. We aren't experts on this, so we don't want to speak to it.
What we can say is that it's extremely complicated.
Yes. And it changes all the time.
It changes all the time. Portland has really depends on which county you're in as well, and which jurisdiction as far as what you're going to be required to do with a tenant and how that lease agreement and rental agreement's handled and all those type of things. So if you can plug in the cost of a property management company, it's well worth it, especially if they're going to handle all the paperwork, get you new tenants, and really scrub those leads hard to make sure you're getting the right people in your investment. It's totally worth it. But, a lot of people do choose to do it on their own, and just make sure that you've done your research and you know what the rules and the laws are around the rental game when it comes to wherever you're located for your investment.
Right. And that kind of leads us into our next section, which is legal considerations. And I think a big thing to consider is maybe 10 years, 5 years down the line, you want to sell the property or you need to sell the property. Well, you can't just rip a tenant out of there without some repercussions.
Well, you need to give certain notices. And if you own a certain number of investment properties, you may be required to pay them a certain amount once they leave, even after you've given them notice. So there's a lot of different things to consider there. We can post some links in our show notes about some places to go for the different counties, for Multnomah County, Clackamas County, and Washington County, where you can, get an idea. All of those counties have links that you can go to just kind of get an overview of, hey, this is what it means to have a tenant and the relationships that have to be in place for that.
There's a lot of media right now around owning rental properties and you can do it yourself. And I believe those things are true, but I also think these other legal things are worth considering because like Joe said, it's a lot and we aren't experts on it. The other thing is working with a CPA. I think you should have a knowledgeable, savvy CPA if you're considering doing this, and even do it prior to purchasing a home, just so you can know exactly what you're going to be taxed.
There are some benefits to owning property, investment properties, different things that you can do, but it is absolutely the best idea to get someone that's a professional that knows how to structure something. And that goes for whether to put together an LLC or how you're going to position this in your personal taxes or all of that. So it makes sense. It's worth the time. It's worth the money. A lot of people look at it up front like, it's the same thing as property management. Well, I don't want to have that cost. And with the CPA, I don't really want to have that. It's not going to pencil out for me if I have all this overhead cost. Well, it can also be a real huge pain in the butt down the road if you're stuck dealing with, a tenant who you weren't aware of their rights, or a tax bill that you weren't understanding how that would look, and the IRS has a lot of questions. Sometimes it's better to just spend the money and try to make sure that you build that into your strategy and your investment to make it work for you, because it can go horribly wrong. That being said, real estate is the number one way that people build wealth. So a lot of people are doing it. You can do it if it's really something you want to do. The other thing I wanted to add, Makayla, is we have a lot of great resources for analyzing certain areas, whether it be by area, cap rates, vacancy rates, what markets are going up appreciation-wise around town, what areas are really struggling, which ones are probably going to have price decreases. So we can help you understand a marketplace and understand where your best buy will probably be. And also, if someone comes, we've had a lot of people come to us and just say, hey, what do you think about this area right here? What am I going to be seeing in the next 3 to 5 years here? We can give you a little analysis to show what that might look like moving forward so that you can make a good decision on your investment.
Exactly. This is an extremely dense topic. It's hard to hit it all in one podcast. So don't hesitate to reach out if we can do any research for you. And hopefully this wasn't discouraging, but that's why we're called Off the Record. We give the unvarnished inside scoop, right?
And remember, it doesn't cost anything to pick up the phone. Call your lender, call your CPA, call your real estate professional, and just ask questions. And we have people call us all the time with thoughts and ideas about what they're thinking about doing, and we're happy to give help where we can, and we always do. So
that's why we're here.
yeah.
Thanks for listening. Do you have anything else to add?
I don't think so. Okay. I think this was a great topic. And like you said, it's a lot of information.
A lot of numbers.
We might dive into some of these things a little bit more closely in the future here. But if you have any topics or anything around this that you'd like for us to really focus on, feel free to go to our website, liveportland.com, livportland.com, and let us know what your thoughts are.
Yes, please do.
All right. Thanks, everyone.
Bye.
Bye.
Thanks for joining us today. If you're interested in finding out more about Joe, myself, or the Live Portland team, you can go to liveportland.com. Thanks for giving us a listen, and see you next time on the Off the Record podcast.